Hey guys, I'm going to chat to you about what the Russian war means for property prices in Australia. My name's Adam Canisi. I do property development full-time. I've been doing it for 11 years and got a number of projects on the books at the moment. After reading and working out what is actually happening in Russia, because it does change on a daily basis over the last couple of weeks, is that there has been sanctions that have been issued to Russia. So you've seen all these billionaires getting their yachts and planes confiscated. Among other things, McDonald's recently pulled out of Russia, so all their restaurants aren't operational. So it's almost the world being against Russia. But what that means is that there's going to be pressure put on commodities that Russia produces. So those commodities, number one is oil, and obviously without oil we can't power the world, including ourselves in Australia. So that's a major concern, that if the war continues, then the price of oil is going to go through the roof. It's already starting to, but unless other countries start doubling or increasing their manufacturing of oil, production of oil, then we are going to see huge price spikes, and I think that that's going to happen inevitably. So what the rest of the world is banking on is that Russia will turn down, and there'll obviously be some sort of peace treaty or something written up that will mean that the Russian war will end and we can start getting supply of oil. So oil is one consideration. The other one is wheat. Although we don't need it here in Australia, wheat is provided to a lot of parts of Europe, as is gas. So you've got some essentials like energy, gas, power, oil, and then things like nickel as well. So you've got some really essential commodities coming out of Russia, and obviously they know this, and they know that they can't be held to ransom forever. And you might have seen some articles, and I've seen a lot of funny memes about, on one side the US is funding the war by buying stuff from China, all these essential items, and then on the other side they're stopping the war, or they're siding with Ukraine. So what that means for property prices in Australia, I think a lot of people are sitting on the sideline and are waiting. So at the moment there's going to be this little bit of a lull in the property market, and that's Australia-wide. Different pockets behave differently, but Australia-wide, I'm talking holistically, more people are going to be sitting on the sidelines wanting to see what happens with the war over there. So there is a bit of a buying opportunity for the next little bit. You've also got the federal elections, which are likely to be held in May, maybe June. So you've got that over the next coming months as well, and normally the property market is soft leading up to the elections. So although I'm saying the property market is going to be soft, we've seen areas with huge price growth. I wouldn't expect that we're going to see some massive price growth for the next few months, but I do expect that overall the prices will hold steady. There's going to be some areas where there's more stock coming to market, and those areas may be affected in the short term and also in the long term. There's parts and pockets of southeast Queensland where we're in huge undersupply at the moment, so I can't see us really being overly affected, other than we might have a bit of a period where there's some really good buying opportunities. And really good does not mean you're going to buy something at half price. It just means that there's less competition in the market, and not every single property goes under contract in the first 12 hours when it comes and lists to market. So I believe there's some really good buying opportunities for the next little bit, especially in southeast Queensland. Those other states that are in oversupply, I think especially parts of Melbourne, some pockets of Sydney, those particular parts I think are going to see some pain irrespective of the war, just because of that supply and demand, at least for the next little bit, until that demand catches up and that supply gets taken up. We are going to see obviously immigration kick off again, and those immigration numbers will also change the landscape as well of the property market. Now, reading some statistics around Perth, in that Perth does not have enough property supply once they start opening their borders, and now that we've seen commodity prices increase, that can only mean that where the commodities are being produced, so for the likes of wheat, if only we produced oil, that'd be great. Although there are some offshore oil rigs in Australia, but not to the extent, obviously, as some other countries. So where we have those commodities and a huge amount of those commodities, you're going to see some pretty high results with people kicking off projects, more money being circulated in the economy, and I think that Australia will actually benefit from those increasing commodity prices in general. So just look at where the commodities are being produced. I think Queensland will benefit a huge amount from these commodity prices with the agricultural production, maybe a little bit over in Perth, and then other parts of New South Wales, Victoria, wherever there's commodity production. So I think Australia's economy will recover, or will continue to recover. There is a false economy with the supply chain issues. So we've had huge price increases, especially on building materials and on other materials where people are waiting for them. You've seen secondhand cars increase in value. That gives you a good idea on people paying a premium just to get something straight away. So there is all of that going on as well. I believe there is a false economy because all of these things are artificially inflated at the moment. We will start to see that ease back, I believe, in the second half of the year, as in supply chain issues will ease back. That could be second half of this year, or it could be into later in the year. So we might still be seeing another 6 months of this artificial inflation, which I believe is why the RBA hasn't put rates up already. If this was real inflation, then the RBA, I don't think, would hesitate in notching the rates up. So I personally don't believe that we're going to see rate increases until the end of the year. The fact that this war is on is obviously making the RBA think twice about increasing rates. Not only that, obviously the supply chain issues on top of that. So there's a lot of things happening at the moment in the economy. Everyone tries to have a crystal ball. Mine is the same. You can only take it one day at a time, really, because it is an ever-changing beast, and unless you have access directly to the person pulling the trigger or directing the troops, you don't know what that game plan is. So we can all try and speculate, as is the same with supply chains. We can try and speculate around when that's going to ease and what the forecast is going to look like in the next 6 to 12 months. So what you've just got to do is take a stance, as in decide what you're going to do in terms of property, whether you're going to purchase a property now, whether you're going to wait, and just back yourself on that. My advice is it's always good buying, providing you're buying in the right areas. So there's areas that you can always get a good deal in, and if you're manufacturing your own equity and your own growth, as long as the market at least stays flat in that area, you don't have to rely on any market growth. Just as long as it stays the same, you don't want to be buying in a declining market, or a market that's going to decline by 10 or 20%. You can manufacture your own growth, and by coming in and buying well, you've already created a buffer as well. So if you buy even 10% under market value, you've already created a 10% buffer if the market does even drop by 10%. So I hope that's really helped. If you've got any questions or your own opinion about what the war over in Russia and Ukraine means for our economy, would love to hear from you, and just leave a comment below. If you like this video and you've gotten value, please let me know as well, and love to see you on the next one.